Welcome to the Tech Blog Writer Podcast, your guide to future tech trends and innovation in a language you understand. Now, over to your host, Neil Hughes.
Welcome back to the Tech Blog Writer Podcast, where every day we talk to a different leader about how technology is transforming not only their business, but their entire industry. And today, I want to explore the world of fintech, or more specifically, innovation in financial services beyond buying or borrowing. And Mastercard have recently partnered with leading financial institutions all around the world to help them invest in and build upon digital capabilities, along with personalised offerings and seamless customer experiences. Now, in a recent report, they highlighted the very real impact fintech organisations could have on the landscape. And the message is clearly, now is the time for them to adapt their strategies and consider all manner of new initiatives if they're serious about remaining competitive. And today's guest is the Chief Product Officer at Mastercard and a member of the company's management committee. And he leads the products and innovation organisation that encompasses consumer credit and debit, commercial, prepaid acceptance, real-world payment and processing solutions in both digital and the physical worlds, as well as Mastercard labs and processing activities. So he's an incredibly busy man. But thankfully, I've secured a few minutes with him today. So buckle up and hold on tight so I can beam your ears all the way to New York so we can speak with Michael, who is the Chief Product Officer at Mastercard, and he's going to tell us all about the insights revealed in that recent report about traditional financial institutions and how they're embracing fintech disruption. So a massive warm welcome to the show. Can you tell the listeners a little about who you are and what you do?
So my name is Michael, and I look after products here at Mastercard. So what does a CPO do after all? So it is obviously the whole product management lifecycle, from product development, coming up with a great idea, to ensure that the product actually runs well, because in the end, the experience is in running the product. So that's what I do for a living here every day at Mastercard.
Now, the world's largest taxi firm, Uber, owns no cars. The world's most popular media company, Facebook, creates no content. And the world's most valuable retailer, Alibaba, actually carries no stock. And the world's largest accommodation provider, Airbnb, owns no property. So it's clear that something pretty big is going on. And in a Mastercard-sponsored report recently, nearly 80% of those surveyed currently felt that there was no threat from fintechs right here and right now. I mean, can you tell me a little bit about that report and help me understand that mindset?
Absolutely, Neil. And the first thing I will say is, and here's Mastercard as the leading payment network, we also don't issue credit cards. So very much in line with everything you just said. Yeah. So here's what's going on with all the data points you've just given. So there's a lot of change when it comes to financial services. Consumers are, experience dramatic changes in their life. So their life is turning digital first. If you're a centennial today, you're going to be further down that road than maybe somebody like me. But, you're looking around and you're seeing intuitive experiences. What are you consuming from your streaming platform? What you are doing when it comes to operating a handheld device. The last time you've looked at a manual is probably years ago. So there is something dramatically changing, and consumers are asking the question, should I not have that across every part of my life, including financial services? So is my mobile banking app as intuitive? Is my when I pay online with using my Mastercard, is that such an intuitive and easy experience? So that is going on out there. At the same time, what is also going on out there is with cyber risks becoming more visible and being more talked about, when you're looking at regulatory change. So all that is translating into an environment where rules and regulations on how to deliver financial services are changing. And the combination of changing customer expectations and regulatory change, and then you throw in, just to make it the perfect storm, technology changes with the ability to deliver many of these consumers' experiences in a digital fashion, you do have a scenario where we felt it's a good time to go out and ask the question on what is really going on. So what are our traditional customers, in this case, the banks, what are they saying when they look at this environment? What are the fintechs saying, and what all is coming back? And as you said, there are some really interesting data points in here. And one of the ones that is striking is, what impact are we seeing today? So is this a false sense of security, or what is going on? And I think the answer is actually one that was largely predictable. Because if you look at it, what people have commented on is really the share that fintechs have gained today from what traditional banks are serving. And remember, we've asked these questions, and the Harvard Business Reviews asked the questions all around the world. So the answer is, well, the impact in terms of share and share of profitability, share of revenue hasn't been that significant yet. But when you look at leading indicators, that's at least from our perspective at Mastercard, you start to see, well, they might be a lot further along. And that's when the answer to the question is, well, what's your view of the future? You do see the traditional financial services companies responding in the HBR study that they expect that in 3 years from now, that picture will have completely changed. And the conclusion is we better do something now, so that in 3 years, we're part of what is going on, vis-a-vis we're looking at the fintechs eating our lunch.
And I'm glad you mentioned there how that mindset changes as we look further into the future, because I think it's so important to highlight that the same executives recognise that fintechs are a threat in the long term. In fact, I think it's 65% of respondent executives worldwide believe that fintech competitors will become a significant threat by 2022. I mean, can you tell me more about that and how many fintechs have had their own competitive advantages, including agile business practices, digital first plans, and an entrepreneurial mindset?
Yeah, so if you picture a racetrack and a stadium, and who's going to be out of the starting blocks first here as we look at these next 3 years. So clearly banks don't come all in the same shape and the same sizes. So if you picture runners on your racetrack there, so you have at the long tail of the spectrum, you have your small savings bank. You have a small bank somewhere in an emerging economy. At the other end of the spectrum, you have a digital challenger bank, and somewhere in the middle is established large financial institutions. So here, when you look across and say what's going to happen over those next 3 years, so on the long tail, you have a lot of banks that will say, when I look at my technological capabilities, I do have the same customer as the large bank down the road, but my technological capabilities might not be the same. So here, the openness for partnerships and the openness for partnerships with institutions they have line of sight to and they are already partners. It's a key mindset change here to say, I don't have all of the answers myself. So I'm going to go and partner with somebody. And that could be as simple as a basic plain vanilla payment proposition is going to be provided by me. But when it comes to a very cool rewards and offer and loyalty related set of functionalities I want to offer my banking customers, then I'm going to go for a partnership. And that partnership somehow needs to slide in very nicely with the technology that I have. So I need somebody who can actually facilitate that. Key headline here is open APIs, and that's a lot of what we see and what we hear and where we can help those banks. So that's fantastic. Then you look at the digital challenger banks. Well, they behave exactly like a startup does. So more agile ways of working, an entrepreneurial mindset, brand new tech stack, all of that is exactly what makes up those digital challenger banks. But even those have challenges where they come to the very same answer of partnership is helpful. If you are a digital challenger bank, let's say, let's pick Europe, for example. What is your plan? And there's a few of them in Europe. What's my plan to grow? Well, I wanted to take my business international. So I have to answer the question that most startups have to answer, not only digital challenger banks, it's my path to scale. So again, partnership-centric collaboration helps, and they reach out to us and say, well, you're a network. Can you be the path to scale for us? How can we roll out our services into Latin America or into North America and so forth? So the collaboration mindset plays out in a slightly different way, despite the fact that they have everything that you think is needed to succeed. But scale and reach is still something that fintechs will need and will benefit from. And then you come to the very large part of the spectrum here that sits right in the middle, and those are the scaled, traditional, large banks. And here you have all sorts of mix of technology, and therefore a varied range of capabilities. The cost of change in large organization is significant. To change the technology, adapt it, to being able to deliver very personalized, individualized consumer experiences. Let's say your loyalty rewards offer comes at the very moment when you actually want it, vis-a-vis getting a bunch of emails on a given days in the morning that you will forget within the next hour, or be it that lending offer that actually happens when you're trying to buy something that a loan would make sense for. So those kind of capabilities, put them through in a technological, simple way is where help is needed. And again, it comes to the mindset start of, I don't have all of the answers, so I'm going to partner. In the case of large, established traditional banks, the continued investment in the technology platforms has been something we have been seeing for many years, and we've been partnering with our banks on that. But when it comes to the personalized experience at the cutting edge, partnership is needed. So oftentimes they come to us and say, well, can you introduce us to a fintech that provides chatbot capability? And then that's exactly what we do. We run an incubator program named StartPath. We see about 2,000 fintechs a year, and then we introduce them to our customers. And as a function oftentimes of the introduction, we co-create. And when I say we, it's actually the triangle here. It is the fintech, it's the bank, and it is us, and say, all right, what should that chatbot do? The chatbot should be doing that. In the end, I can buy a plane ticket on a chat function of some sort of social network. And then it is something that flows right into the mobile banking app and all the way through into my account. So partnership in different ways all across the board. And that, when you have that kind of a mindset, I do think that if you look at the next 3 years, for different reasons, you're going to be relatively well positioned.
I'm glad you mentioned customer experience there. And at the beginning of our conversation, we talked about how customers are looking at almost every aspect of their life and then turning to the world of finance thinking, well, I want that same experience there. So can you tell me a little bit more about how companies should plan to continue personalising those customer experiences, but also measure ROI on the initiatives they undertake to leverage that financial technology and also leverage internal and that third-party data and from those third parties that they're increasingly working with?
So Neil, here it comes back to comparing who is positioned well in this world of a lot of change around us. So fintechs, the heart of our survey here, tech capability, a great understanding of particular parts of a consumer journey. They will optimize a particular experience and make it the best possible experience that you can have, leveraging the technology capabilities that they have. So that's great. And then you say, well, how can a bank even compete in this space? Well, there's a starting point here that is very different, and that is a bank knows their customers really well. They have all the data. Oftentimes it's a long relationship, so you know what your customer does. You have the data points. Imagine for a moment you leverage the data points to deliver up a consumer experience that is actually really personalized. So that would be a real big difference. And say it is not reactive when a customer wants something from their bank, but I can tee up. Here's let's say a lending offer, a mortgage offer, a loyalty solution of some sort. You get your air miles to pay for this particular thing that you're just wanting to buy, whatever the example might be. The data is there. The trick is you have to use the data. So getting the right data skills in-house in a bank is a important critical step getting the data analytics platforms in, and start to move your data analytics from reactive to real time, so that you can actually serve up a solution and a consumer experience when your customer is looking for it. Those are the critical steps. Again, from a technology perspective, that is not easy to do. Those are oftentimes new platforms, new capabilities. You have to attract the talent. Those are the coolest people around. Do they really want to work for a bank? So I think you have to really put yourself out there and attract the right kind of talent. Entrepreneurial mindset, finding a way to carve out your innovation activities in a way that you create the environment of high speed to market, learning from failures, agility, and attract people that want to work in an environment like that. Those are all ways of making sure you position yourself and making most out of the opportunity.
And for any business leaders that are listening, can you also tell me a little bit more about why working with leading banks can actually help implement an impactful analytics strategy, enabling them to ultimately embrace the right strategies to navigate through this fintech disruption?
Yeah, I think partnering with fintechs on data analytics, I think is a critical strategy. Actually, for fintechs, as an opportunity to partner with bank, and for banks to learn on how you truly take the data that you have in a test and learn approach, leveraging artificial intelligence to deliver the conclusions from data, moving from data to insights to foresight, so to say, at the right moment in time to your consumer. I think we see great capabilities in banks that have been some around that have been doing this for many years, but with the advent of artificial intelligence, leveraging some of those capabilities that the fintech sector brings to play, I think is an amazing opportunity for collaboration. Again, we are pulling in our own partnerships in this space, and we're introducing them to banks to drive a three-way partnership here. We're leveraging our own AI capability and our own test and learn capability with our customers to prove the power of their own data to them. And of course, it doesn't stop at your own data. So partners, banks have partnerships with many stakeholders in their ecosystem, be it retailers and others through co-brand relationships and so forth. So leveraging joint data pools to really come up with the right kind of proposition to a consumer is the right thing to do. And then, of course, keeping in mind when it comes to data analytics, that underlying strong principles around how you reach data, I think is, again, another advantage for the banks, where you say data privacy, data transparency, and leaving the control around data in the consumer's hands is one that consumers will look to their banks to deliver on. I think they have the advantage of trust here, but the fintechs bringing the capabilities how to, once strong consent is given, how to actually work with that data. I think this is a partnership that just makes overabundant sense across the board. And for us as a network, competing the fintechs and the banks is a key role for us to take.
And businesses all over the world are currently facing the exact same problems. So I'm curious, are there any trends around the kind of problems that customers are coming to you and asking to your help with at Mastercard?
Yeah, so our customers, and here it's a very broad set of customers. So we obviously deal with banks, which are at the heart of the Harvard Business Review study here. And the questions that we get there is, our customers are saying there's a set of additional services that we want to offer to our end consumers, the bank account holder, the card holder, and that could be loyalty services. It could be ways to manage your digital life by saying, hey, I want to turn off this card for this merchant, I want to turn off that card for that other merchant. In a world of open banking and consumer consent, I want to manage my consent through my bank. There's a whole range of things that banks are not necessarily doing themselves today, and they're looking to us to say, can you augment the consumer experience that I'm putting out to my customers? Then you look at other customer segments where people are coming to us, and that could be a merchant, for example. It could be a retailer, a large online retailer who's saying, well, in a world of so many digital choices to pay online, I'm looking for a very simple checkout experience. So how can you help me that there isn't all this clutter, and here's a very straightforward experience? Secondly, how can you help me to ensure that when I pay online, I have a similar type of user experience as I do in a shop, and that is that generally the payment works when it's supposed to work. Online, that isn't. That is still a challenge in many parts of the world. So that is the type of partnership that retailers are looking for from us. And then you look at broader topics that people are trying to solve, and then you get into the realm of governments. And governments are looking at market infrastructure. Governments are looking at the regulation. Governments are looking at general economic structure. So just to give you a couple of examples here, and this is where we are very well positioned. Look at market infrastructure to start with. So cards is a great way to pay. It makes something fairly complex super simple. You can pay with your Mastercard anywhere, online, offline, anywhere in the world. But it isn't the only way to pay. If you look at the volume of payments, 50% of all retail payments, more than 50% of all retail payments globally happen from one bank account to another. So you get an invoice and then you pay. But if you look at the utility that you have in card payments, the payment goes wrong. What do? You call up your bank and say, "Oh, I never got those services," and you charge it back. Doesn't exist in the world of bank account-based payments. So bringing utility into all types of payments and helping to ensure a true consumer choice when it comes to choice in payments is something that we've helping governments with. Our real-time payment capabilities, when you look at the UK, Mastercard runs a real-time payment, or rather operates the real-time payment network. We're also a leader when it comes to card-based payments in a market like that. And we ensure that consumers in the end have choice on which way they want to pay. Take SME, another interesting aspect of what governments are trying to do in a given market. Oftentimes, the SME sector is the backbone of a country. The government says, how do we strengthen that backbone of a country? If you are an SME and you're running your business, one of the challenges you're likely to face is your access to working capital. Oftentimes, there isn't enough data available for a credit decision to be made. So we're having solutions and platforms that we're piloting and working on with governments in different parts of the world to say, imagine you had the supply chain data of an SME digitized, and you use that data to drive a credit decision in a very different way, because now you have line of sight to the data. Wouldn't that be a great thing to do? So partnerships with governments, with central banks on topics like that. Or financial inclusion, just to top it off. There's still 2 billion people out there that are not part of any formal financial system. So again, that is a different type of partnership where people are looking for that. And across the board, back to fintechs and technical capabilities and changing consumer expectations, across everything I just said, all of those customer segments that we work with, everybody's looking for digital first. They might skip a few decades. If you're new to a system, you're not going to go through the same kind of loops and hoops that we've had over the last 20, 30 years when it comes to where we are today. You're going to leapfrog right ahead. So many of the learnings that we see when we talk fintech today apply to the bottom of the pyramid and people entering the financial system from day one. So fascinating change all around. And this conversation here around fintech isn't limited to what the HBR study actually shows. It goes way beyond.
And what excites you about the road ahead and how technology is changing that financial landscape and everything we've talked about today? And do you think it's too early to get excited about things like blockchain and crypto solutions? And what's your views there at the moment?
So if you look at the road ahead, so I think the report makes it overabundantly clear that the next 3 years going to be full of dynamic change and opportunity, turning from opportunity to reality. I think we're going to see these partnerships with fintechs and established banks. So a function of which I think is going to be better banking and payment experiences in the hand of consumers, because banks will contribute what they do best around trust and brand recognition and leveraging the data that they have for the customers on all the financial transactions. And on the other hand, you have fintechs that have, very specific capabilities, can move fast and iterate around a particular consumer experience, bring the two together with Mastercard as the enabling network in the middle. I think that's just going to make the world of how your banking services are delivered to you, Neil, look very different in 3 years. So that is by all means exciting. But, then in the next 3 years, what else is there? Well, what else might happen? You look at blockchain, you look at AI, you look at a set of very interesting emerging capabilities and technologies. I think AI we're going to see leveraged very, very broadly for safety and security to ensure that payments work in a way that they should do. So the payer is the person that he or she claims to be. The payment is safe and it arrives the way it's supposed to. I think that's a clear application where we see artificial intelligence play out. I think around personalization, the world of rewards and offers that clutter our lives today, I think is going to be much more personalized and contextualized as a function of use of AI. So I will only get the offers that I really want to. I think the combination of the safety security space with the personalization space is really where we ensure that we leverage technology to focus on transparency, on control, on privacy of data as the intersection of both, because you don't have to trade them off. You can have a great consumer experience and it's still all of the above. And I think artificial intelligence will enable that. You look beyond and then you say, well, in 3 years, if that is what we would be doing, what else is out there that is still unsolved? And then look in the world of the broader world of financial services with so many players around. Many times transactions go from hop to hop to hop. So a world of peer-to-peer interactions with very few intermediaries might give an even better user experience. And consumers will continue and end users will continue to ask for that. So the pressure won't go away. So if you look at cross-border payments, for example, we've just recently made an acquisition with Transfast, which is to close in some months from now. But basically, we have a view that the world of cross-border payments today is still very complex. And there is an opportunity to make it easier by ensuring that you wanting to send money from here to Malaysia isn't a matter of 3 to 5 days and 5 players in between to do that. Blockchain is a technology that could possibly make that a lot easier. It is, in the end, a centralized ledger where you can make a peer-to-peer payment. When it comes to cryptocurrency, since you mentioned it, we believe crypto has been faced with some challenges to scale. And then you asked the question why that is. Now, part of the challenges around crypto is that the volatility and therefore the store of value function that a currency generally brings, which a fiat currency will bring because it's backed by the economy of a given country and the government of a given country, isn't really the reality in crypto. So I think there's still a couple of questions around how crypto might make a difference. But, national digital currencies, stable coins and the like, you can see that the industry is starting to evolve that. So we're in the middle of that dialogue. We're helping to drive it forward because whatever makes the payment experience better in the end is going to be in our interest.
Fantastic. Well, I cannot thank you enough for coming on the show today. And we've covered so much ground. And there are so many details in that HBR report that we've not talked about today. So before I let you go, could I just ask for anyone listening what the best way is to keep up to speed with any developments at Mastercard and also take a look at that report that we've just mentioned?
So a great way is to follow Mastercard.com. There's our newsroom on there. So we'll keep all of our followers updated there. You find us on Twitter with hundreds of thousands of followers. So we're pretty active because there's so much to share on what is going on around us. So keep looking out for Mastercard on that. I think it is worth reading the report. It's a 16-page report. So I think you'll see some fascinating data points in there that spur the imagination on what might happen in payments in the years to come.
Fantastic. Well, thank you so much for coming on today. I myself have learnt so much from that report, and I'm sure everybody listening will too. So I hope to stay in touch with you and get you back on and over the next few months and follow your journey at Mastercard and the great innovations and how you're leveraging technology there. But more than anything, just a big thank you for joining me today. Thank you, Michael.
Thank you, Neil.
Very often we hear how the world of finance has been slow to adapt to technological change. But I think that is not the case anymore. I mean, in this report alone, 2/3 of survey respondents say their organisations have already learned from fintech innovations and adopted fintech strategies of their own. And once again, it's customers that are driving these changes by increasingly just expecting seamless payment processes as part of their shopping experience, just like they do in all other areas of their life, both in and outside of the office. And the big takeaway from the whole report and my chat with Michael today is that institutions that limit themselves to yesterday's business models and the technologies underpinning them is ultimately going to narrow their path to growth. But that's what I took away from the report. But for anyone new to this podcast, the way it works is the guests will come on and offer their insights and I offer mine. And finally, you listening all over the world in 165 different countries are invited to join the conversation by sharing your insights today too. So, as always, email me, techblogwriter@outlook.com, tweet me at Neil C. Hughes. You can get me on LinkedIn and Instagram. Just look for Neil C. Hughes. You'll find me there too. So I hope you enjoyed this one as much as I did. And in the last week alone, we've had HCL, Citrix, and now Mastercard on this show. But I can promise you many, many more big names ahead too. So keep those messages coming in, and a big thank you for listening. But until next time, don't be a stranger.
Thanks for listening to the Tech Blog Writer Podcast. Until next time, remember, technology is best when it brings people together.